Today, I'm going to be giving a lecture titled Tiny Island, Big Ideas. Now, the structure of this lecture is composed a little bit freeform, but with enough backing to really let people sink in and get some good facts. The main goal of the lecture is to educate the listener on the British economy, post and pre industrial revolution, and post and pre imperial stronghold. There was a time where it was mostly the kings and the queens that were making a lot of these economic decisions. It was a little bit farther before this, and it's not going to be something that's going to be touched on heavily, but I will make note of it. The biggest thing and the largest focus of this lecture is how truly special societally, economically, and socially the British economy was. And I know saying a British economy and economically special is a little bit redundant, but it truly is special. And that is the first slide. What made it special? A lot of people think that Britain was just doing one thing, but Britain was diversified, truly diversified. And what that means is Britain did not just have one thing that made them money. Britain as a country and as a whole had a multitude of trades, commerces, goods, materials, and cargo that made them obscenely large amounts of money. Whether it be silks, spices from India, whether it be slaves from Africa, sugar cane from the colonies as they call it, um, indigo from anywhere. We're talking a multitude of products and a multitude of just objects in itself that were making Britain a lot of money. Now, if we had to focus on one big idea, the idea was trade. Britain's main goal was to take a product from point A and move it or place it with people who were going to need it at a higher price. When it comes to indigo, if it cost $5 to get to India or to get to China or to get to Pakistan to get the indigo, they were going to sell it for 15 and make $10 of profit. Now, this $5 is completely landed, and what that means is the $5 is going to include the seafare, the trip there and back, that is, the people who were going to have to source it, the people that they were buying it from. It was extremely profitable, and they were diversified to that level of specificity on every single market available. So, in essence, the singular market was trade. But within that market, they were highly diversified and highly prone to capitalizing in certain markets. Now, the British Empire steadily expanded and braved new markets, as I touched on lightly before. This is this was an antithesis of the pre-industrial imperial reign, who were not too interested in expanding into new markets. If we talk about King Henry VIII, papal hound in the latter half of his life, he was more of a papal renunciate. He renounced the papacy and created the Church of England, just as a shout out to him in the Protestant Reformation, his role in that. But he and Britain as a whole at that time was not into expanding into new markets, steadily expanding into new markets, that is, at the rate that they did during this time, during the time of economic prosperity, especially when we see these lines of demarcation drawn, when we see Portugal expanding. Post 1492, we see an economic boom of sorts, and pre 1700, we see Britain really taking charge of this, especially with their ability to expand into new markets, especially within China and especially within the slave trade in Africa. Though it was it was paved by Portugal, the cement and the foundation were laid by Britain. Now, This already, even though there is a lot of money exchanging hands, even though there is a lot of success, they did single-handedly, almost single-handedly, that is, cause the toppling of multiple empires. The Indian, the Chinese. A lot can be said about Britain's hand in Iran, in Africa. Well, back then it was Persia. So we see a lot of destabilization in these places that Britain touches, and this is not on accident. This is not because they were ignorant of what made these places special, and it's not like touching a flower and it dies. This was a very structured, a very targeted form of destabilization. If we look back into China, the Qing dynasty, to be exact, we see the Opium Wars being a high level of the destabilization within their bureaucratic helms. So, what made China so powerful was their bureaucracy. So, their bureaucracy allowed them to have almost complete control of every single aspect of their dynasties. So, what did the British Empire do? They destabilized that with a drug. They targeted what made them strong and they destabilized them. And what was the result? They maintained and they kept Hong Kong. They took that over and had a foothold into China. And from there, it was just a couple of chess moves and well placed mortar rounds to almost completely control the country, as well as India, as well as Africa, as well as the colonies. The resulting strength of the British Empire was not the fact that it had the manpower, but it had the understanding of where to hit and how hard to hit to create such a destabilized factor within that society. Now, what really happens? You know, History books will only tell one story. But from what we know, Britain had a very diversified, steadily expanded, committed economy. Now, what does committed mean? What made it possible to be committed? It was the pro-commerce parliament. Speaking on what made it special, a lot of people will begin to think, well, that sounds like a very large undertaking. How would one go about doing that? How would one accomplish these goals without extreme amounts of monetary backing? And that was exactly what the parliament did. It backed them to such a high level that it was almost impossible for them to fail, which is very rare that you see a government backing so thoroughly. They had a lot of buy-in into new economic ideas as well, such as the joint stock companies. Now, they were not the first joint stock company, but they were one of the first. Amsterdam and their tulip ships were the first joint stock company in essence, but it was more after the freight was delivered, after the business was completed, that joint stock contract would go away. The East India Trading Company was a true stock company in the sense that it was within perpetuity of ownership of those shares that you would receive benefit, not just one cargo exchange. The economic ideologies that made them strong, though, were the invisible hand. And they were the ideas of Adam Smith. And this was not always. Adam Smith, almost born in Britain, he was born in Scotland. But Adam Smith created these ideologies a little bit after when Britain really started to become a powerhouse. And there were problems, of course. It was very heavily centered within government control. Adam Smith created the ideologies that selfishness within theory, selfishness is going to drive, self-interest is a better word, is going to drive economic innovation, market, and economic stimulation. So if people are interested in succeeding, they're going to go out and they're going to do a lot more for themselves than they would for a flag. Was the basic premise, to be completely basic. Now, why would anyone care? We're talking about something that happened hundreds of years ago. I mean, it's not like it's happening today, is it? No, that is incorrect. The opposite of misery loves company. That terminology, misery loves company, is always, if you're going to stay average, if you're going to stay within your means, if you're going to stay within your abilities, you're always going to have a lot of company. What Britain did was different. They took imperialism, they took imperial rule to the next level, which is hard to follow. But they also did something very interesting. They full heartedly and they completely loved the idea of self interest. They really did start the wheels turning for capitalist endeavors, especially with the Industrial Revolution. Post Industrial Revolution, we see a lot of people coming into fortune. This is going to be one of the first times where you're going to see that dichotomy of old money and new money becoming a problem within society. They almost single-handedly created the ideas of industrialization and large enterprise commerce. Now, problems with this is monopolization as well as a lot of propaganda, miscommunication within organizations, and you could call it a lot of misappropriation of funding. Those are just some problems, but a lot of the pros are steady work environments, good, you could call it a competitive pricing standpoint. The more people who do something, the better prices you're going to get. Now, this really is important. They created a stage for innovation that allowed all of humanity to advance. Without the British economy and without their truly adaptive reasoning towards the Adam Smith Wealth of Nations principles, we would still be sitting on the stage where the wealth for one equates to the poverty for many. Now, the wealth of one in Adam Smith's model is going to create a standpoint for more wealth to be therefore not distributed, but an equal footing for it to be created. There are cons, though. A lot of pain and suffering within the perfection of imperialism is a big con, and you can still see ripples to that in this day. The most interesting part of it, you almost see it being reversed now as the most popular, the national dish of England is curry. So we can see that there is this translation that has not fully left that, I guess you would call it, societal fringe, right? There is still something on that fringe that is still there. Maybe it's not going to be spoken of. It's not like America, the United States, brings up being a colony ever. I think that's more of a British concept, but we still do see it. Thank you.